Hi, and welcome to CMS Forex News. I'm Christina Robinson, and today is Friday, April 18, 2008. The dollar had a strong day versus the yen as Citigroup posted a $5.11 billion first quarter loss, which was actually not as bad as economists anticipated. In fact, investors are becoming less pessimistic, thinking that the worst of the credit squeeze is over. The U.S. dollar-yen pair is highly correlated with investor sentiments on the U.S. markets and surged 200 pips to touch 104.40 by 1 p.m. Eastern Time. Dollar strength was clearly evident against the euro as well. After setting a session high following the German producer inflation data, the dollar ripped off a 230-pip rally, bringing the pair down near 1.5710, close to its levels from Monday. German producer prices, the leading indicator for inflation, accelerated 4.2% on the year and 0.7% on the month in March. The annual rate was the fastest in 15 months, but had little market impact today. Investors reopened carry trade, and the pound yen had another monster day, climbing 400 pips from its overnight low, adding to yesterday's gains. Yesterday, the Bank of England announced that it would take on £30 billion of bad mortgages to alleviate the credit squeeze and revive mortgage lending. The news helped the pound rally 1,000 pips against the yen since Tuesday. The Swiss franc, also a funding currency for carry trade because of its low interest rate, was heavily pressured. Here against the pound, it lost 400 pips during today's session, making it a two-day pound-franc rally of 800 pips. The franc fell close to 200 pips versus the euro and dollar in today's session as well. Other destinations for carry trade, like the Australian and New Zealand dollars, performed well against the yen today. The Australian dollar capped off a 450-pip rally against the yen after its low on Monday. The pair found resistance near 97.40 after the New York Open. In Canada, wholesale sales disappointed, falling 1.8% in February. Declines were led by a 4% drop in the automotive sector. The leading index remained unchanged for March after it declined an upwardly revised 0.2%. The U.S. dollar is not able to strengthen against the Canadian dollar. After declining overnight, the pair was in a volatile trading. The Canadian dollar performed better due to another surge in oil prices. Next week, the Bank of Canada and the Reserve Bank of New Zealand will decide on interest rates. With easing inflation but weaker sales, policy members in Canada may cut rates by 50 basis points. Some important releases from the U.S. include durable goods data and new home sales. Australia will reveal quarterly inflation data, which the central bank monitors closely. And that completes this week's Forex News. Join us again Monday right here at CMSFX.com.